Got it.
So,
I hope you can still see my screen.
yes, sir.
Yes. Yes, you can
Okay.
see your screen.
All right. So now there is a reason why I talked about structure firstly, because if you don't really understand structure, you can be selling when you are supposed to be buying, and you can be buying when you are supposed to be selling. So structure is one of the major thing in the market. If you understand structure, you understand how the market moves, you'll be able to get the exact, because anyone can know point of interest. It's very easy to identify somebody's point of interest. Like you can just be like, okay, there is a reason why this guy is selling. He sees this and he sees that. That's why he's selling at this certain points. There is a reason why this other mentor is selling. He sees other block or whatsoever. That's why he's selling, not buying at this certain point. So when we talk about structure, structure is a thing that's going to help you to be able to identify, okay, is the market about to sell? Is the market about to buy? Once you have been able to identify it, that is when you will now say, okay, I need to use the point of interest I've learned to be able to execute my trade at that particular point. So now, APA means advanced price action. And when we talk about advanced price action, we're talking about what the market is about to do and not what the market has already done. So in terms of SMC and other strategy, is mostly about what has occurred. So what do I mean by that? Like their TPs, for those of you that have traded SMC before, their TP or ICT, their TP are mostly where the market has tapped in before. But when you talk about price action, you are trading what, most of the time you are trading what has not even occurred. That's why you can see me put my TP to the next highs even when market have not tapped before, because I believe from that point I'm marking out my point of interest, the market will be able to push it from that zone to the next level. So that is it. Now, there are different type of point of interest when we even talk about advanced price action, but I focus more on just two. You understand? I focus more on two because those two are the ones that help me a lot in the market and has given me most of amount I've seen also in the market. So firstly, the one I'll be talking about first is the one I use most, which is the head and shoulder pattern. Some people call it the ABC pattern. Some people call it the invalidation zone pattern. That is the one I love using most because it's very easy for me and it's very accessible. So let's go to the line chart because I will first of all use the line pattern to show you guys a lot of things before I start marking out the distance. So now in terms of the invalidation zone, like I said on the structure class, I said if we're having a buy trend, for example, the market is buying, each of those retracement point the market is creating, I said the market should not break it. So if the market create any low, it is not expected of the market to go down and break that low all the way to the downside because the market should retrace each and every retracement point. This is for a buy trade. Now, one thing is that the most of what I talked about on structure class, I was talking about breakout, which is break of structure and continuation to the other side. Now, how will you be able to identify continuation? We're also going to be talking about that in this class. And how will you be able to identify breakout? Also going to be talking about that in this class. So now, in terms of um when you want to get a breakout, like you will know that the market want to change structure from the buy it was giving you to sales. How will you be able to use that using the structure and also the point of interest? Now, this is a buy trade, for example, and like I said, the lows of the market shouldn't be violated, which is every retracement zone of the market should always be respected. Every retracement point of the market should always be respected. So in terms like this was our previous retracement point. This is our previous retracement point now. Once the market has created a retracement point, for example, after that retracement point, it should be able to break out to the top side. So if we have a breakout now to the top side, if the market break the lows of this retracement point. So this was our previous retracement point, like I said. So the market has broken the lows of this retracement point. How would you be able to use your invalidation zone entry model in executing this trade? Yeah, the invalidation zone entry model, like I said, some people call it the head and shoulder pattern, some people call it the ABC pattern, but the head and shoulder pattern is something that will be very easy for you to identify. Like, because these things are things that I learned just looking at the chart. Most of the knowledge I have on the market are stuff that, yeah, I just looked at the chart and I was like, yeah, I've seen this. Anytime I see this move, you understand? So when I started noticing that, okay, this is what I trade, I don't even have name for it. Is when I started checking out that, okay, why is it that this happened, this and this? Then I found out that, okay, some people call it the invalidation zone, some people but these things are things that I saw by myself without even anybody telling me. And I knew that, okay, this thing works. So even apart from teaching you that, okay, this is what I know, and these are things that I found out myself. So this is not like I'm the founder of advanced price action. Please don't get me wrong. I'm just trying to tell you that even before I found out advanced price action and the rest, I was already seeing this thing occurring by itself. So how would he be able to identify the point of interest on a trade like this that has broken structure all the way to the downside? That is where the head and shoulder pattern comes in. So this is the shoulder pattern of the market. This is the shoulder level of the market, and this is the head level of the market. This is the head level of the market. Now, once the market has broken structure to the downside, the market mostly respect the shoulder levels. It hardly goes to the head. So you don't expect the market, as the market has broken structure to the downside, the markets will not come to this head level before selling. No, the market usually respects the shoulder levels. I will also teach you how to mark out the shoulder levels perfectly. So the market doesn't go to the head. If the market goes to the head, expect it to even still retrace back. If the market goes to the head, this is you expect the market to still come again, tap into that invalidation zone, which is the shoulder pattern before even continuing the major sales. But if the market goes to the head double times, I don't even trade it, but it has a name for it. We have I think it's an interrupted invalidation zone and invalidation X and the normal invalidation. But I just use the normal invalidation zone, which is the markout of the shoulder levels. So same thing goes for someone who is looking for a buy trade. Someone who is looking for a buy trade, example, the market is selling and we're having series of lower low and lower high. So example, this is a low, a retracement to the high side, a low, a retracement to the high side, a low, a retracement, a low. So once the market breaks structure, so this is a break of structure to the top side. So now once the market breaks structure, where will you mark out as your point of interest? That is where you mark out the invalidation zone, which is the shoulder pattern. So this point over here is the exact zone where you mark out as your point of interest. So this is the shoulder level. This is the head level. The market will come to the shoulder level after breaking out. After coming to the invalidation zone entry, then it will not give you a breakout all the way to the top side. So this is how the invalidation zone entry model is very easy. But firstly, you have to do it with structure. Then this is about breakouts. Then what if we're trying to look for a continuation of a trade? Inside of a continuation of a trade, I usually use the other point of interest I'll be talking about, but still there's a way you can still use your invalidation zone on a continuation of a trade. So for example, this is a buy, like I said, any point of interest I'll show you, I'll still move to the live chat so that I can show you how I've been using it to execute a lot of my trades. So this is a buy trend, for example. Now, how will you be able to continue the buy? Anytime the market come to the 50%, so you mark out from these levels to this level. So this is what we call outlook. Outlook is somewhere you're saying, okay, I feel the market will start to buy or I feel the market will start to sell at that particular point. Outlook is not a point of interest. You understand? So if this is a short buy trend, you know the market is creating lower highs and higher highs. So once the market does like this and break structure, from that point where the market breaks structure, you mark all year at your outlook. Now, how would you be able to still find out the point of interest? If you go to smaller time frame, if this is 1 hour, for example, if you go to smaller time frame like 15 minutes or 5 minutes, you will still see a major point of interest that break the structure. So what do I mean by that? Any point of interest you are marking out as your point of interest should be a zone that you know that, yes, this point that I'm marking out also created the major breakout. So even on 5 minute time frame, that point of interest you are about to mark on the smaller time frame after going to 5 minute or 15 minute or 3 minute or whatsoever should be a major point of interest that made this breakout. So from this zone, from this low, which was the previous retracement point, to this point over here. If you put it on smaller time frame, for example, you're going to see stuff like this. Like you're going to see the markets giving you movements like this on smaller time frame. So you're going to see stuff like this or whatsoever. Yeah, stuff like this and this before the breakout. Now, even on smaller time frame, if you want to use the invalidation zone pattern, you will still mark the 5 minute invalidation zone. So when you see a market like this, you will know that okay, yeah, this is also giving you an invalidation zone vibe. And one thing about invalidation zone is that if the head and shoulder is very close, you mark out all together. Yeah, I even forgot that if the head and shoulder are pretty close, you mark it all together. But if the head and shoulder, there is a distance between the head and the shoulder level, you mark out only the shoulder level as your point of interest. And like I said, I will still be showing you guys how to do that on the live chat. So this is the invalidation zone, which is the shoulder level. That is where you mark as your shoulder level. So you expect the markets to now give you a retracement to that zone. So you do it like this. Now the markets will have to retrace back to that point for you to continue your buy. So this is where you will now put your point of interest and you put your SL below it. But stuff like this, once the head and shoulder is very close, you just use your SL to cover up both the head and the shoulder. Then you put your TP to the next high. Like now, this can be your next high, which is always my TP1. If this was the previous high that market has created, I always use it as my TP1. But since you know that the market is giving you a continuation of a buy trade, you can put it to the next expected high. You understand? It must not be to the next high that the market has created. You can also say, okay, marking out the next high, even without the market tapping there. That's why I say AP, advanced price action is something that you are doing something that hasn't happened. You understand? Something that hasn't occurred rather than something that has already occurred. So this will be the place where you put as your TP1 zone where you'll be taking your profit from, and you can also figure out a way to take it to the next high because of you believe the market is gonna go there again. So let's dive into the live charts. And what time frame is this? Sorry. Okay, this is 15 minutes time frame, which I will say is a small time frame. It's not a bad time frame, but now, like I said, if we put this on higher time frames, you see that the markets was like the market has started buying, and even on 15-minute time frame, the market is buying. So, like I said, the continuation of a trade, how will you be able to do it? This was a continuation of a trade I wanted to catch, but market didn't really tap me in. So, like I said, any point of interest you are marking out, even on smaller time frame, that point of interest should be a major point of interest that break the highs. So, this was the high of the markets. This was our former high. You understand? So, I will mark it out. This is the high level. When you're marking out your high, you don't mark out the body of the candle, you mark out only the wick. So that was the previous high. And the market was giving us a sell vibe. You can see we have been getting series of sells and sells all the way to the downside. It's not expected of the market to break the next high, but instead the market broke the next high. So all these points is where the market using breaking the next high. Let me delete this first. I'm coming. So if I delete this, when you are marking out your breakout, like I said, you don't talk about the week. The week isn't valid because if you put it on line pattern, you see that the market even stops there. Can you see? The week is not valid. The market only respect the shoulder when you are marking out your breakout. So the breakout already occurred here. So you name here your break of structure because that is where the break of structure already created first. Now, how would you be able to get your point of interest? And why did I mark here as my point of interest? This was my previous point of interest. Like I said, the market didn't really tap me in. I missed this trade. This was a very good trade. My first TP has already been hit. Like this is my TP1 already. It has already been hit. Now, just invalidation zone entry model. And when you are marking out your invalidations on entry model, the week isn't valid. You understand? The week isn't valid. You are marking from the body of the candle. So if you are going for a buy, for example, you are marking the lows of the body of the candle. What do I mean by that? If this is the body of the candle, for example, if this is the body of the candle, example, you want to go for a buy, and that is the body of the candle, and this is a week. Where will you mark out as your point of interest? Your point of interest should be under the body of the candle, somewhere around here, under the body of the candle. Then why are you using as your SL? Your SL is the week low. So this is the week, for example, your SL will be around here. You understand? So that is how I mark out my point of interest using the invalidation zone. So I'm gonna I'm not done with these parts.
Sorry, sir. I didn't get the SL part.
No, no, calm down, calm down. I'm just giving an example. So now on live chat now, just like this, you understand it more on live chat. So on live chat, I'm gonna show you most of my trades I've been taking using this. So this is the invalidation zone point. You understand? This is the shoulder level and this is the head level. As you can see, like I said, the invalidation zone entry model has to do with the ABC3 pattern. So it's just like this. The market has to retrace back to the shoulder level. Like I said, the market doesn't come to the head level, but if the head and shoulder level is very close, you can use all as your SL. So where will you mark out? You mark out under the body of the candle. You don't mark out the wick from that any time frame you're using, as long as the invalidation zone is being shown on that time frame. You mark out under. So this is under, you understand, under the body of this candle is here, and this is the wick. So the wick is what you use as your SL level. So this is the wick. Now you can see that the wick, like I said, the wick is where you use as your SL level. So this is the wick level. All right, yeah. Then this is the body and this is the body end. I'm going to show you how I also take my sales. So this is for buy. So I was expecting the market now to come to this point. I was expecting the market to come to this point. Then my SL is below the wick of the shoulder level. You are not thinking about, forget about the head, except if the head and shoulder is very close like this, although it's close on this kind of trade. So you can say you want to cover both the head and shoulder, but it's not every time the head and shoulder is close. But stuff like this is how I wanted to take the trade, just that it didn't tap me in. So that point was my TP1. You see, so when people are saying, how is he doing small SL? It just has to, it's just something about knowledge. You understand? You need to put in, please mute yourself. You need to first of all understand structure. Where did the market break structure? And that point that the market breaks structure, is there any valid invalidation point I can use as my measure? Listen, and any place you are taking your trade, don't take buy trade when you're supposed to be selling. You understand? So we'll also do that. We have not reached that clear. That will be our third class, which is the top-down analysis, so that you understand how to use higher time frames coming down to know what the market is about to do for that day. So let's go to other chart also. For example, let me show you guys how I've been using. This is just one point of interest we're dealing. So this was another point of interest. So let's leave that first. Okay. Exactly. Now, this is still invalidation zone entry model. Now, this entry model was being like I covered both the head and shoulder because there's no much difference. Yeah, so I had to cover both the head and shoulder. But how was I able to catch this trade? Firstly, you need to understand there's a break of structure. So this is a buy trade we're having. So the market has been buying, for example, from this low to this level. You can see that clearly the market has been buying. But the market is supposed to continue that buy that the market has given us. So when the market is buying, it's supposed to continue that buy. Anything that makes the market to start giving you a break to the downside, you're supposed to understand that yes, a sell is about to be created. So from this point, from these levels to this level, you can see that okay, gold was buying. Now, where did I mark out as my low? This is a low. Like I said, you don't mark out from the body of the candle. The body of the candle isn't something you mark as your low. So the major break of structure was being created from this level. So this is where our break of structure was being created. So you mark here as your BOS. I don't like writing all this on my charts. I just like making it clean. Running out of time. I thought my this thing is upgraded. What is wrong with this people? So break of structure. So this is where the break of structure was being created. So now if the market, as long as the market has broken to the low, even if you put it on line pattern, as long as the market has broken to the low, you will know that yes, a break of structure has already been created. Now where will you be looking for your point of interest is the invalidation zone. So if I put this on 5 minutes, the invalidation zone was being shown on 5 minutes also another time frame, but it will be very hard to find that. Okay, let me. So you can see that we've already marked out the break of structure point. Now is for us to find a proper invalidation point. If you see a breakout and you don't see any of the point of interest I'm gonna be talking about, you just leave it. You understand? you just leave it. So it's basically about having that major point of interest. Like those point of interest must show themselves before you execute your decision. Okay, okay. Okay, I guess this is it. All right. So now this is it. Like I said, you mark from the head, I mean the shoulder pattern of the market. So the shoulder pattern of the market is, if you put it on line pattern, you're gonna see it clearly. So around these zones are where the shoulder pattern is. Like on 5 minute time frame, we're seeing a lot of shoulder patterns on this point, but sometimes it will be very clear for you, but this is really confusing. But around this point is where we have our shoulder. So the shoulder pattern is around this zone. So you can say, okay, oh, here is my shoulder pattern. But like I said, since the shoulder and head levels are close, I just had to cover up all the levels, you understand? But that is the shoulder and head level. So if I put this back on line pattern, you can see that, okay, this is where the shoulder level was, and this is where the head level was. So let me put this back on 15 minutes time frame. Is also showing. You don't look at the, you don't look at the, what's it called? The week. The wig isn't valid, so you look at only the body of the candle. I don't understand the remaining 7 minutes. Is it that my Zoom is different? The one on my phone is different from my laptop. So, okay, this is where the shoulder level is. Around this point is where the shoulder level is. You understand? So that is where the shoulder level is. That is the shoulder, and this is the head of the market. A breakout structure has already been created. I mark it out from the top.
Sorry, sir.
So,
Where is the end game? Sorry. Hello, sir.
coming. I'm coming.
Okay.
This class one end. I don't know if my Zoom on my phone is different from the one on my phone, but it's same email. I don't understand them all. The one on my phone, I subscribed to it. I thought I linked it up to my laptop.
It seems it's different.
What do you say?
It seems it's different because the
Yeah,
last one,
I
the
guess
name on
it's
it was Michael Effects, and this one is Michael Matthias.
okay.
Matthias.
I think I made a mistake. I think I made a very big mistake. So if this one ends, you know what? Okay, let me just quickly wrap the invalidation zone point. So I will call you guys again and we'll talk about the this thing. I made a mistake if so. All right. So somebody was saying he can't really see. What do you say? Yeah, you can't really see the head and shoulder. So this is it. This is the
Yes, sir.
shoulder level. This is the shoulder level and this is the head level. Like I said, the wig is not among. You are only marking from the body. So this is the shoulder and this is head. And now the wig of the shoulder shouldn't be as high as the one of the this thing, as high as the one of the head. That's why I cover all, because this is the shoulder level, this is the head level, but the wig of the shoulder level came up and give us equal heights. So you saw that I just marked everything all together. If this wig of the shoulder level was very short, this my essay would have been very tiny. You understand? So once you see it like this, where the shoulder and head level is very, very close, you just mark the whole thing as your point of interest. But putting it on line pattern will be very good for you, because line pattern is going to show you well clearly. So you can see on the 15-minute line pattern is very clear. Double hit on the shoulder level. This is the head level. You mark from the where. If you cannot mark it out like your on your, like looking at it with your own eyes, you cannot really see that point. You can use the this thing, the line pattern. The line pattern is always on your trading view for you to be able to get it. So we just have 5 minutes on this point of interest. So I'll call you guys again. So same thing for here. This is also an invalidation zone entry model. Exactly. So we're having cells. You can see, so this is a cell. The market was giving us a retracement, a low, a retracement, a low, a retracement, a low. You understand? Then a breakout. So, like I said, you always ask yourself the point at which the market users doing the major breakout. That is where your point of interest should be. So, even if the market has broken structure, you will not gonna say, I'm going to look for point of interest at these lows around this point. No, you look for the point of interest at where the major push out was. That's any point of interest you are marking at, there should be a major push out. Like you should see a very, like a current massive buy or massive sales at that point. So where is the shoulder and head level? You can put it on your this thing. your line pattern to show you well properly. So in line pattern, you can see
This one
this
is
is the
this
point
one
of
is clear.
interest. Yeah, this one is very clear. That's why I say that one can be confusing to you guys because you guys are newbies to the strategy. So this is the shoulder, this is the head. And like I said, once the head and shoulder is a bit far, you only mark out the shoulder level. So on the shoulder level, the SL is the weak. So this is the SL level, which is the weak of the shoulder level. So you can see how the strategy is very good and very easy. So this is the shoulder
So,
level. Okay.
yeah, so you marked two breakouts. Which one is the one you're referring to the upside? Is it the
Okay, yeah.
But I
Yeah, I
put
love
on
this
the
your
pen.
question. I love this your question. If the market only broke only this, which is the first one, I wouldn't have taken it. You get.
Why?
So yeah, this because now, why did I say that?
Because
After this reversal was being created, you see that the market did not come down. At least if this is what happened, I love this your question. If the market came this way and break down, yeah, I would have said this is a major breakout. You get, but once any reversal is being created and the low is not broken, that is not a major breakout. You understand? The market can even do this. If the market has broken all this, I wouldn't have taken it. I love that question. So the market would have even done this. You understand? Hit these points and create heavy sales again. So
oh yes, yes.
that is not seen as a major breakout as long as the low is not broken. So this is where the major low was being broken previously. You can see this is where the major low was being broken previously. But after this reversal was being created, there is no low being broken. So you understand. So this is the major breakout. Forget
Sorry,
I just put
sorry,
this.
sir.
I just mark that point so that we'll have maybe two breakouts to be sure of what I'm doing. But this point
okay?
is a major breakout.
But
Yeah, go on.
Okay. Thank
Okay,
you.
This is
sir.
not
Sorry,
this is
sir.
not time for
That
question. No, you guys know we have only 2 minutes on for me to
Yeah.
call you guys again.
yeah. I just want to relate with this thing you are saying
Okay,
now.
okay, yeah. Go on.
This place you said is a major breaker. Is it because it's the last break of structure to the downside?
Yes,
I mean,
exactly,
this.
because it's the last one. Exactly. This one did not create any breakouts. So if okay, this is example. Let me give you a clear example. Like now we're having a buy.
this one like this, now only the week it break.
We were having a buy. You will not say this is a breakout. Okay, if market now come, example, a market, okay, this is a breakout now. The market will not come. Wait, this is getting all confusing to me. But what I'm trying to say is that if this low didn't break the major low, like I didn't mean it came down all the way to this point, would have said, yeah, this if the market break it now, this is a breakout. You understand? But this one was a major breakout also to the downside. The market has broken it to the top side. So this is not a breakout because I said the wig is not among. So this is where the market was supposed to break all the way to the down. But you can see that is the body. You understand? So this is the body. This is just weeks. The market just came a little bit down and went up. So I didn't mean the market stop here and start coming down. I wouldn't have said, okay, this is invalidation point I've marked out. For example, I wanna say, okay, the market come here. And it will just give you maybe little profit and give you better SL. You understand? So these are things you also need to put at the back of your mind. So we have 1 minute. Let me just quickly show you guys one more point of interest if I'm gonna see.
Oh, sir, maybe let us come back, please. Maybe we should come back.
Let's come back, right?
Yes, sir.
Okay, so I want to end. I hope you guys are understanding where we are going to.
Yes, it's interesting.
Yes,
All right,
Very,
bro.
very interesting.
yes, sir.
Sharp.
We will
Okay,
have
let
to
me
recap a bit.
exactly. So
Please
I'll
don't
be
forget to
ending.
send the link of this particular one.
Yeah,
I
exactly.
just
So
sent
I'll
to
be
you.
Now
ending
that
this.
is that is interesting. Now they make me laugh.
Please